Hey guys, in this video, we're gonna take you to a stream that I just did this week where we had an over 40 handle move, and literally during the entire move, I'm talking about and giving a master class on how to manage your stop loss. If you like to take or want to take bigger moves and you've been struggling on how to manage the stop losses, well, we're gonna be going over that in this video, so definitely stick around. You're gonna enjoy it. Let's get started. Right now, what we're going to target is we're going to target this 50% retracement of the range that we've ran. You can see it on the higher time frame. Let's look at this at the 5 minute. I want to see if we got a... All right, so we did get a change in state of delivery on the 5 minute. See if we can take this. All right. I'm just putting these up here so I can drop them if I need to. I'm gonna set one right at 50% of the equilibrium, and then come on. This is equilibrium. Don't do that. All right, so there's equilibrium. We're gonna move stop to break even for the rest. Stops at break even right now, above break even, and we'll take our next profit at this high, and we'll leave a runner, see if we can get anything else. I don't know how much higher we'd want to go though. I'm gonna actually put it right below the high. Just make sure I get filled there, because I don't want that to happen and run against me. All right, there's profit TP2. Now let's hold a runner. Let's see if we can get one. How high do we think this can go? Have a swing high here. We have a swing high sitting right here as well. Five minute. What do we got on the 15 minute? Okay, 15 minute has a fair value gap sitting up here. We also have a breaker. Resistance there. Man, I don't know. It could easily just retrace right here. What am I up right now? We're up $1,000. So we have room. Let's let it run. Uh, 100%. This is why if you can do Diane, if you can have multiple contracts, it makes it easier. It's a lot harder to do this when you're on an eval account, because you don't want to, when this starts dropping, I'm going to be in drawdown $400. If this breaks me out at break even, I'll be in drawdown $400 even though I'm up, because they have a trailing stop of $2,500. So that's just I'm not as concerned about it because it's an eval account, but let's just see what happens. It has been pretty aggressive here. I would love for it to just fly. But the last thing I want is it to go negative on me, so. Yeah, so 100% Joseph is the trailing drawdown. You have to have tighter stops and be comfortable just taking your 10 handles, your 20 handles and getting out. That's honestly what you should be doing. That's why I sold two of them already, because you have with your trailing drawdown, you don't want to get stopped out when you're green and then you get stopped out at break even. Yeah, on a cash account, do that any day, but when you do that here, you're down $400, right? So basically what I'm going to look at is I'm hoping we turn this into an order block. A close above this down close candle right here will make this an order block. Okay? So what I'll do here is if we close above this in 40 seconds, I'll move my stop just below the mean threshold of this. This is how we work on managing our risk. You have to it just takes time, and I'm getting better at this every day. But I'm hoping this closes above. I'm hoping it closes above in 22 seconds, and then I'm moving my stop to the mean threshold right here. Just below the mean threshold, the middle of this down close candle that is now in 10 seconds will be an order block. Perfect. Come on. Okay, so now we're just beneath the mean threshold here. This is protected, meaning it should not come down here unless we're running the other direction. So now I'm in a better spot. My stop has moved up. I'm not taking or willing to take that amount of drawdown anymore. I'm still only going to be down a little bit if we do that, but I'm allowing myself for this bigger move. Now, I've done this before and I thought it was a bigger move and I get stopped out. That is going to happen. You're just creating the opportunity to give you that opportunity to get a bigger move here. And the only way you're going to build that skill set is by doing it over and over to the point where now it's like, okay, this has an opportunity for it to run higher. I'm going to hold for it. So the 15-minute candle is closing right now. It just closed. This is where we could see a retracement right here. It wouldn't surprise me if now that the 15-minute candle has closed, you can see it, that if I get stopped out here, we retrace here and then move higher. But I might be willing to take my stop, might take it out now as well. But let's see, this is 53 from 39. So that's 15 handles. Let's see if this holds. We're just going to let it play out. This is an eval account. We'll just see if it plays out. I know, the drawdown sucks. So what are we targeting? We're targeting this swing high on the lower time frame, this fair value gap on the 15-minute time frame. It's aggressive. This is an aggressive target, but we're going to see if we can get it. We also have this small volume imbalance right here. This is also an area, if I had another contract, I would want to take profit on, because I could see it coming up to here and then turning around. If we put in another order block and we break higher, I'm going to move my stop up again. it's allowable. It is allowable for price to come into this fair value gap. A wick in here, institutional order flow drill, wick into here, and then move higher. That's something that you need to tell yourself it's okay to see that. It is just below the mean threshold of this order block. Deborah. The order block, down close candle, just below mean threshold. If I put a fib on here, and we look at where the mean equilibrium is, you can see where equilibrium is right there. I have it just below it. Now we're waiting for a close above this candle right here. As soon as we get a green candle that closes above this, I'm going to move my stop to the mean threshold of this candle next. You may want to consider profit here as well. And I'm considering that because it could turn right there. I'm going to move my stop just below the mean threshold of this candle now. Okay? Allowing for higher targets, but I moved my stop higher, so now I've locked in more profits. Okay, the mean threshold, we are sitting at the mean threshold, so let's move this just below the mean threshold by 2 ticks, and let's see what happens here. All right, we closed inside the volume imbalance. Remember what I said? Keep an eye on this volume imbalance. It wouldn't surprise me if we turn right here. It wouldn't surprise me if we get a bigger retracement, because this is it's not a true volume imbalance, but it is a volume imbalance, and you can see how we closed inside it. Ultimately, our target is sitting up here at 19,103. This literally is a masterclass on stop management. Live. What do we got next on the 1 minute? Nothing. If it's going to turn, it's going to be here. If we drop down to the 30-second, do we have a fair value gap? No, there's nothing to the left of us here. Okay? So I can say with confidence, if we're going to turn, it will be here if we're gonna turn. If there's no plans on reaching this high, we will be stopped out here because there's no other reason to go higher. And that's exactly what happened. We just got stopped out. Deeper retracement this time because this is the last volume imbalance fair value gap before we hit this high. Could we still hit it? Absolutely. But we're managing our risk the best we can, at the same time allowing our runners to run but not lose out on the profits that we made. And here is that profit that we made. Now the question is, we had our last stop loss that we moved sitting right around here. Let's see if that stop would have been hit. We have this fair value gap sitting right here. This is where we'd want to find support anyway, and see if it moves higher from here. That is still the target, but let's see how deep of a retracement we get after we hit this volume imbalance. See how that one tiny 1 minute volume imbalance can be the difference in taking. This is why you want to take profit at these levels, is because you just get bigger retracements at fair value gaps and volume imbalances. There's nothing else stopping it to hit this high besides this, and that's why we see it retrace. Okay, there's our stop. We would have been stopped out again right here if we did not move our stop up to here. So I'm glad that we moved our stop to the mean threshold of this next order block. We locked in 15 extra handles by moving that in. So that one trade gave me $1,100. So we're up $1,100 on this eval account.